technology, diversity, wine, the redwoods, and everything in between. Welcome to the Northern California Bay Area, and one show takes you inside the real estate that makes it all happen. This is By the Bay.
Hey everyone, and welcome back to By the Bay. I'm your host, Dan Ancheta, and I'm really grateful that you are here watching and listening anywhere on Spotify, Apple Podcasts, YouTube, anywhere else you might be listening to this show. I am back with a great guest who actually reached out. She's a listener and an amazing real estate professional, listener of the show of By the Bay. This is Mahla Zabet. Thank you for being here, Mahla. And thanks for reaching out. It's really cool that you did that. And if anyone else, if you're listening to the show and you're in real estate and you want to be on the show, always looking for fascinating, interesting guests and people who I don't know. So it's great to meet you in person. And thank you for taking the bold step and reaching out to be on your very first podcast and being here. So thank you.
Thank you so much, Dan. Thanks for having me.
So you have a really cool professional background. Right. So you have a PhD, an MBA, and all these other things. You've worked in the tech industry, and now you're excelling in your career as a real estate professional. So introduce yourself to the audience and kind of tell everyone kind of your professional background, and then we'll get into some more questions.
Sure. Yeah. My name is Mahla Zabet. I'm a real estate professional. I live in the Bay Area. And as you mentioned, I worked in industry for 10 plus years. Initially, I was in technical parts of the industry, and then slowly I transitioned to business development, where I was mainly responsible for establishing relationship with customers, maintaining that relationship, and also negotiating multi-million dollars contracts. So a lot of skills that I've learned during that experience, and I'm leveraging all those learnings in my real estate journey as well.
Yeah, it's nice because you're not new to multi-million-dollar deals, and the market that you're playing in Silicon Valley, that's a typical first-time home buyer is over $1 million or $1.5 million or more. So so your background, so you went to Davis to get your
my master MBA.
MBA,
yes.
And then before that, Mississippi State, is that right?
My PhD from Mississippi State in chemical engineering.
Chemical engineering.
Yes.
So you have a highly detailed technical background, and that's what you're leveraging as you're growing your real estate practice. And especially where you are in Silicon Valley, I imagine that a lot of your clients really appreciate relating that you've worked in industry before, and you know what their income looks like, and you know what the stock option stuff look like, and all those other details. So tell us a little bit more about how your prior career and education skill set is helping with your current real estate practice.
Yeah, definitely. That's a great question. So, my journey when I started my PhD and graduated, it really taught me to be very much data-driven. And I see that also in a lot of my clients who are in tech. To go over all the data and present them the situation in local market, giving them the insights, that made the process much easier for me, and finding the same, language and how to connect with those people. And additionally, as you mentioned, since I was also in tech, I'm familiar with the RSUs, all those stocks that some of my clients, they're having the same situation, their vesting schedule, and how I can align their, for example, purchasing timeline with what they need. So overall, I would say that this whole journey in the industry, it has helped me a lot with also managing the emotions, because I went through that. I learned how to deal with objections when I did contract negotiations. So all of them are transferable, and I'm really using those skills right now.
That's awesome. So the RSU topic comes up, especially in the way that we underwrite loans, that sort of thing. But for those who aren't familiar, maybe not working in tech, can you explain what an RSU is, why someone gets it, and how they actually turn that into money? And there's some interesting details and intricacies with RSU income, right? So tell us about that as in general.
Yeah, in general, RSU is a type of the stock that it's not really a cash right now, so it gets vested, and until it gets vested, you cannot leverage that. And generally, it is quarterly. At least my experience in industry is it's vested quarterly, based on quarterly basis, and It depends. Some people, they get that RSU package as part of their compensation plan when they join a company. I myself got that a few times. And then depending on that timeline, you can vest those and then try to align it.
And then you can do something with
exactly,
it, right?
do with that. So
yeah, it's interesting because sometimes you see these compensation packages where like on the W-2, you get like, hey, we made $750,000 last year. Okay, like 250 of that was actual salary cash, but 500,000 of that might have been restricted stock units.
Right.
And like that's not actual cash today.
Yes.
Right.
Yeah.
And it might be a 3 or 5 year vesting depending on what your plan is. And like you said, it could be vest quarterly or sometimes every 6 months or once a year, depends on the overall package. And so from a loan perspective and from like a cash flow perspective, you have this big income number, right? Because it goes on your W-2.
Right.
But it's not actually liquid cash. And so if you're newer in industry, there's like a lag time from where you have like maybe years where you have future cash coming, but you can't access it for a number of months or years. So that definitely impacts someone's ability to purchase and the cash flow that they have available to like pay their monthly bills. So from like a working perspective and like a practical matter, since you've done this, how do you manage that?
So, it really depends on everyone's situation. People have different situations. Some of the clients that I have, they also have some cash they set aside, and they are not solely dependent on these RSUs. So they just need a fraction of that maybe to be able to get that. And I would say it really depends on everyone's situation. I would try to strategize, right, based on how much money they have in cash, connect them with for instance, the lenders, right, the network of people that I know, so that they can work with them and understand different options that are available for them and find the best one. But really starting with what their need is, I usually start with that to understand my client's goal, what their need versus want is, and then what is their financial situation, connect them with professionals, make sure that they are, they have the financial, stage that they can afford it, and then move forward with looking at properties and all the steps after that.
Yeah. That makes total sense. At what level, like of a professional, do you start getting offered RSUs as part of your compensation package? Is that an entry level? If you're like a recently graduated, tech worker, is that standard to get that RSU in a compensation package, or do you have to be at a senior engineer level, or when does that start really taking effect?
I would say it depends on the companies.
Okay.
There are some tech companies that I see that even entry level they get some package of that, but there are also some companies that I've been working on which was more related to senior level positions. So it really depends on the various companies and how they set up their financial.
It's so interesting how different industries like have prevailing things that happen. So like in like commercial banking where I used to work, you had to be a certain level. You had to be a senior vice president or something like that. And then you start getting stock options and things like that built into your comp plan. But anything lower than that, it's just, your W-2 and your, standard bonus stuff. So just wondering how that worked in the tech industry. So it sounds like depends on the company and depends on probably how much cash they have to pay in salary and how much they want to pay in stock, because it's not necessarily a cash, it's cash burden for them, right? Because
Exactly.
they're utilizing the stock, and then they can the individual employee can sell that on the open market and turn it into cash without the company having to actually cut you a check.
Exactly.
So really cool instruments that people use to build wealth. I've seen some clients. I do a number of work with a lot of tech folks, and especially buying in San Francisco and Silicon Valley. And it's really, really interesting to see how much income some people have generated through RSU. And it's like, wow, that's like big numbers. And they're like, yes, but it's not cash yet. Like it will be in 3 years. So, but the actual cash flow is based off of the vesting schedule. And as you like are growing in your career, you might have a lag of a number of years where, hey, I only had, $100,000 that's vesting from 3 years ago. But as things start kind of picking up and you have multiple years stacking on top of each other and everything else, then it turns into a lot of wealth quickly.
A lot of wealth. And I see that a lot from the clients that I'm interacting with in Silicon Valley. Some of them are ready. They already vested a lot of that stock and ready to go for it. Even, we're talking about even like $10 million house.
Yeah.
So, and I see that like it is like they have really more leverage right now.
Yeah, no, for sure. So specifically talking about like tech workers and tech employees, it seems like, there's the main hub is really in Silicon Valley, but then there's like this other market of San Francisco proper, right? Where there's like, they're kind of one or the other, right? So can you kind of speak into like how those markets differ and what like your stereotypical buyer is looking for in Silicon Valley as opposed to someone who might also work in tech that's looking in San Francisco? Does that make sense? How there's kind of like, my impression, my experience is that there's kind of like two very different people, two very different buyers, right? And maybe it's age or maybe it's family, other things like that. But they look either might be working for the same company and doing the same job, but they're looking in two different markets very differently. Can you kind of speak to that?
Yeah, for sure. So as you stated, like different areas in the Silicon Valley versus outside of that. I think what I'm experiencing right now is for some people who are working professionals, they really one of their criteria, which is very important and it's a hard requirement, is, for example, to be close to the offices that they're working at.
Right.
So they want to not be, for example, more than 20 minutes far from the office. So that's what I see they're looking for mainly. And outside of that, there are a lot of people who are mainly looking for, second houses for vacation and all of that. So it really depends on like the client and what their status is and what their situation is. And I need to really customize, the strategy, like how to build it together based on everyone's needs. So because some people really want to be close to work versus some others, they that's not their priority.
That trend is interesting. And I also think the trend of, not coming like fully remote work. I think that's coming to an end in a lot of places where people are wanting people back physically in the office. But I know that there was a time period where fully remote work during and after COVID led lots of people to leave the Bay Area and maintain, their job, but they moved up here to Sonoma County where we are, and they're buying a house in the Russian River and they're like telecommuting. And if they needed to go into the office, then it's like a 2-hour drive. But if they need to go in once a month, then it's kind of fine.
Yeah.
So that trend seems to be reversing itself. Are you seeing the same thing with more people like coming back in to live proper in?
Yeah, I see that more because a lot of these companies, I see that they're asking people to spend more time in offices. And, it has changed. Some of the companies, they completely changed the hybrid situation to on-site. So that's why bringing those people back right now to be closer to their offices. So that's what I'm seeing right now and experiencing.
And even during those times where people were leaving, their demand for housing, especially in Silicon Valley, has always been high. Those prices never really went down, even in the in the depths of recessions that we've seen in the past. So they did some, but not like the rest of the country. So how does that impact? Like, is there enough building, new construction, that stuff that's happening down there that is able to soak up because there's new entrants, new graduates, new companies, people coming to the market, and then also all these other people who are coming back, because they were living elsewhere. Now they have to be back here to report to the office, multiple days a week. Is the housing supply keeping up with the demand, or are we still seeing, is it more imbalanced because of that return to work trend?
Yes. So I believe we are not building enough and soon enough. I think it takes a long time in California to build, and that is not a short-term solution right now for a lot of people. But in terms of like inventory, it's very much stratified. I would say it depends on where you live and where you are. There are locations or cities, for example, let's say in Sunnyvale, where I am right now. I live. I know that there are more. If you look at like March inventory compared to like February, there are more houses in the market, like single family and townhome versus condos. The inventory has reduced, but we're seeing different situation and statistics in other cities. And again, depending on even type of the property that you're looking for. and the slight variation in location, you will see different situation in terms of inventory pricing and all of that. So,
yeah, it makes a lot of sense. I mean, yeah. So, and I think last time I was down, I have family down the peninsula, so we kind of go down there now and again, and it's like, wow, this is all very different. There's all these new condo buildings being built and everything else. So it seems like the diversity of housing is also an important factor. Like not everyone needs the 10,000 square foot, mansion. Some people are really looking for a very efficient condo that's nearby. So
Definitely.
are they doing a fast enough work to like build those type of like condo type living situations that are nearby to the work centers, or are we still behind on that trend?
I think there are not enough, inventory in terms of like for people to buy. Sometimes it's just available to rent.
Okay.
So that's another issue that we are facing in that area right now. But as you mentioned, I totally agree. There are some people who are looking for, they're not looking for a mansion. They don't have a big family. They're looking for small houses. And also depending on their financial situation, they want to start with something smaller, right? Which is, I usually suggest it's better to make something, to get something, to earn something. And if you can afford it, it depends on everyone's situation, but if you can afford, I think it's good to start with a small place. Maybe you can afford a condo, and then down the line you can do refinancing, selling, and buying something else. But it's better than just waiting, I think. And that's what I suggest to my clients, that if they can afford, let's do that.
Yeah, I think like being a first-time home buyer in a very, very mature market like that is hard because, it's so competitive and there's not a lot of inventory and there's lots of people who have lots of money. And so it's like, well, how much are you going to pay? Like how much is everything's going over, everything is multiple offers, and you have to have a good strategy, right? To be able to overcome all the obstacles. So when you're advising a first-time home buyer, how do you help them create a strategy to like win in a competitive market situation?
Right. So for first-time home buyers, it's also, I think it's very segmented, right? Some of the first-time home buyers, they are tech professionals. They have a lot of stocks. They have the capital. It's just a matter of time, and they can afford it. Mm-hmm. And there are some other people that I generally, the people who might not have a stock or in different situation. Again, depending on if they have kids, they don't have kids, what they're really looking for, what is their criteria, does it matter for them to be in a great area with great school or not? Because that impacts the pricing and all of that.
That makes sense.
And in general, evaluating, their financial state. I'm not a loan professional, but I have the network of people. I usually work with them and see based on their state, if they can go with like fixed rate versus adjustable, how can we make this happen based on where they are?
Got it. And you mentioned that like a lot of your clients are very like data driven, and buying a house is typically like an emotional decision, right? It's not necessarily, you don't necessarily buy the house that makes the most financial sense. You buy the one that makes you feel something, right? So how do you balance and help people who are very data-driven, scientist brain, programmer brain type people, and help them like find that emotional connection to that house that really like drives them to want to buy it and own it?
It's really, the way I manage that is for people, I really start having that conversation with them to know what exactly they're looking for. And it's a at some point, it's very important to know that you need to compromise sometime when you're looking for something. There are some properties that check most of the boxes, but it might not be perfect, like 100% aligned with what you're looking for. But there are some people, my clients, that they're in love with that, and I help them to make a strategy about like making the offer. And how we can win based on their situation. And in terms of like data and analytics, it's I usually have I try to have that appointment with my client. That's my goal, really. Even when I do like open houses or anything else, my goal is to set an appointment. And I really believe in face-to-face interaction. And during that meeting, I usually go over the buying process with them, like what needs to be done, what are the different steps. And I also present them the value that I bring to the table and the data overall in terms of like inventory, where we are, what's the best to do, and all of that. So I make that connection with them initially and then navigate them through the whole process.
It's interesting because a lot of like sales gurus and that sort of thing would be like, don't worry about the data. Don't worry about the numbers, because people, it's an emotional purchase. So like talk about the feelings, talk about the emotions. But I think it's some markets, that's probably not the best advice. It's probably like, no, like they want to see the data. How many houses? What's the average purchase price? What's the average cost per square foot they want? And it makes them feel, safe and seen, like having all that data around them. So then they can like feel like, well, I'm a data-driven person. I want to know the numbers. So like, don't hide the numbers from me. Tell me the numbers. So I think it's one of those interesting trends that affects a very specific market area, because it basically, not anywhere else, but most of the places in the country, you want to talk about like, how does the house make you feel when you walk into it? Where do you imagine the family gathering? Like, how does this play into your life? How does it fit with your long-term goals? And it's like the dreams and goals type of conversation. Do you find yourself having that conversation mostly?
I have both of the conversation, like from emotional perspective, and some people are asking about the data. They want to know what's happening. And I always prepare those information for them too. So it really depends on the client. Some of them are more data driven, and I want to make sure that they get what they're looking for.
Totally. My experience with especially engineers on the loan side is like they look at the loan estimate very precisely, and they have questions like
exactly
to the penny, because it has to balance. And I'm like, yes, okay. But I didn't know about this fee. It's like, okay, well, we have to disclose higher on the appraisal cost than what it's actually going to be, because if there's a rush, if there's a certain thing, then we can't go back. Anyway, so, but they want order. They want it to all make sense and fit in the box. And so those conversations from my perspective, when I do like an intake call for someone in tech, we talk a lot about the data and a lot about the numbers, and not so much about, the dreams and the goals. And they're like, I have a financial advisor that's advising me on my team that's taking care of the money. This is its own separate thing. And, they want to talk about the precise numbers and data they're going to drive their financial decision. Yeah.
And I think like it can be a, balance of both. I also, when I show properties to people, to my client, I want to project or make them imagine what they can do with this property. So there are a lot of things that I can show them, that what they can do, for example, with each part of the house, and how can it be used for what purpose. And that makes it, for people, some people are very curious, and they overall their decision, it will change when they can imagine what you can do with the property.
Yeah, for sure.
The house.
Do you have a lot of clients who are looking for like multi-generational housing solutions?
I have some of my clients they are looking for example, they have their parents, they want to, their parents to live with them. There was a situation I had, like one property in Saratoga, that I have a buyer who is interested, and he was talking to me about his parents that gonna join and live with them. So yeah, I have some of the clients who are looking for that.
I saw that trend too. Like the last 3 or 4 tech folks that I've worked with are like, well, my parents come live with us for 6 months, a year. They're from whatever country, and so I need enough space for them. I need an accessory dwelling. I need enough space for theirs, like to be multi-generational living, because we want them close, and that's what the cultural expectation is, that they're close. We don't want to put them in like a hotel or Airbnb. They need to be in our house, but we need a little bit of space. So very interesting. And I think that impacts like the demographics of the Silicon Valley impact the type of housing that's being built, because there's specific needs. So I'm just curious to know if that was something that you see in your world. What other trends should we be looking out for in Silicon Valley real estate? Is there anything that you're seeing like coming down the pipe in terms of what what trends we should be looking at for 2026. Like one thing that comes to mind is there's a lot of AI companies that are looking at doing IPOs, and that will make a lot of money influx come in, and especially if you have employees who have own shares of the company, and all of a sudden it goes public, and then stock prices go up, and that's just like an influx of cash, and then people have more cash, so they want to buy stuff, and that drives up real estate prices. So that's like one trend I'm looking at. Is there anything else like that you're seeing in the markets that you're playing in?
It's all about AI. What I'm hearing right now mainly is, as you mentioned, about these companies, because I have a lot of network who are working on these companies, and I'm really talking about the IPOs, their timeline, and how it's going to impact the real estate. Another thing is like overall with the political situation that we are in, it's just for some people, they're asking questions about how it's going to impact the interest rate, for instance, and all of that.
It is currently doing that, and will continue to, especially as critical infrastructure that's not easily to be replaced is being blown up. And it's like really, really unfortunate, because it's just obviously for the humanity side of things, and we don't have to go down that rabbit hole, but first and foremost, it's awful that people are dying, right? But also, when it comes to global markets and energy costs, it's not easy to rebuild a plant, right? It like takes billions of dollars and many years to rebuild it, and it takes not too long to blow one up. And it's like, well, this is happening, and so what does the global supply chain do about that, right? And it's like, well, there's no easy fix, and the demand for energy is going up as more countries are becoming more advanced, and we just don't have enough renewable. So what do we do there? It's like, well, we just see prices of energy continue to go up and up and up, and that causes inflation and the cost of goods to be driven up. And then you have central banks like last week signaling that they need to increase rates to combat inflation, which we know that song and dance. We've been there through the COVID, all the influx of cash when all the COVID money went out. So be really interesting to see what happens in the next year or two, because it's not like, hey, we found a ceasefire, everything goes back to normal. It's like, well, okay, now all this stuff's damaged, and now we don't have, enough supply going, and then things start slowing down, and then how do you make up? So it takes a long time to recover, right? Quickly to destroy, hard to recover. So yeah, I think that is spot on. I think we're going to see rates go up. They continue to, and we're seeing some fluctuation with some news about, hey, we're negotiating. No, we're not. Yes, we are. That happened this morning. So we'll see what happens. But I think that the signal is, unless there's other intervention like the Federal Reserve stepping in to increase quantitative easing, or other things that increase the money supply that will help interest rates, specifically mortgage rates, I don't see that we're having the trend continuing that we saw earlier this year. Was like, hey, rates are in the high fives, low sixes, party time. Now they're up in the high sixes, low sevens again. Here pretty quickly, a few weeks later. But it's much harder to recover from these socio-economic and global conflicts. So very, very interested to see what happens next, and what policies are put out there to help continue these helping these financial markets, because they're all really struggling right now. So anyway, not sure what else to say about that, but there's the.
That's right. I totally agree. I think the time that it takes to recover, it's going to be a long time. So,
yeah. And then you think about just the amount of money that's being spent, and like who's paying for that. It's just really, really not. And then someone's got to pay to rebuild these things. And then if you're a oil company or an investor, like, do you want to spend money in a part of the world that is having this type of unrest and uncertainty, and it's like, well, that's maybe not the best place to put your money, so that's then it just becomes this: who's going to build it? How do we pay for it? How do we increase the supply?
Uncertainty.
A lot of uncertainty for sure. And when markets are uncertain, rates go up, unfortunately. Okay. So in thinking of like your real estate practice, just kind of bringing it back home here, for the rest of kind of 2026, we're here, end of the first quarter of 2026. Where do you see the market going in Silicon Valley in terms of price and demand and buyer and seller activity, kind of for the rest of the year?
Yeah. So I see what I'm seeing right now is, again, this is a bit stratified and nuanced, but at least some of the markets that I'm working on, I see that it's becoming more kind of like buyer's market right now. So there is more, negotiation. There are more doors opening for negotiating, and the situation is sometimes you see that some of the properties have been like overpriced. It's very important to price the property right. And I usually talk to my clients about that, because what will happen is, and what we're seeing is, when you overprice the property, it's going to stay on the market for a long time. And there's also a correlation between how many days the property has been sitting on the market and the low offer that you get from the buyers.
For sure.
So again, that shows the importance of pricing correctly. What I'm seeing right now is a lot of, in some situation, price reductions, more negotiation power or leverage for the buyers. It's becoming like a bit more stable, and what I'm seeing is towards like buyer's market a little bit, and that's the situation currently that we're seeing.
That's great, honestly. There's been a seller's market for so long, and to be able to dictate price and term and have, multiple offers, no contingencies, tight timelines, everyone's running because they want to get in. And I think like slowing it down a little bit is good, and having, buyers be able to go and look at a house and actually do the analysis and not, dive in headfirst on a deal because they just they want to get something,
Yeah.
like that frenzy kind of activity is not healthy for long periods of time. So it's nice that things are slowing down a bit. And if we can get a period of time where it's more of a buyer's market, that'll help a lot of first-time home buyers be able to get into the market instead of being pushed aside by, high net worth, all cash people that just wipe them out. So, very, very interesting trends, and a lot of like I said, a lot of uncertainty. So it'll be interesting to see how, capital markets wind up contributing to this, and what happens with investment dollars and other things that impact, it's a global economy. So all these things are connected, and just like supply chains being disrupted is not good overall.
It's not good for any industry, right? Because everyone is dealing with supply chain to different extent. So
just like shipping is more expensive, right? Because like insurance carriers are going to want a premium now because there's a lot of them. Anyway, you get it. Yeah. Cool. So what else? What other any tips that you have for someone? So you're dealing with a lot of first-time home buyers, right?
Yes.
So what tips do you have for them as they're getting prepared to make their purchase? Anything that stands out for you?
Pre-approval.
Yep.
I think that's very critical. I see a lot of first-time home buyers. They would like to go and see houses, as soon as possible. But I usually try to, make them pause and evaluate their financial state before doing that. Because what happens when you're not ready is you spend a lot of time looking at houses, and then finally you find something that you love, and then you find that you cannot buy it because of loan or anything else, and it makes you sad. So I want to prevent that situation.
Yeah, it's hard to look at houses if you don't know what you're approved for and what you're comfortable paying on a monthly basis.
Exactly.
And it's you're just kind of searching in the dark in a way. And then it's like, oh, well, I didn't realize the payment was going to be $10,000 a month. It's like, well, yeah, that's how the math works.
Exactly.
But my budget is $7,000. It's like, well, don't look at that house then.
Yeah. So you want to make it like efficient and also a smooth process for my clients, and that's how I help them. And also bring the value. I mean, for me, one of the values that I'm bringing, really, that I believe I bring, is to support and serve my client from beginning to end, from A to Z, and even post-closing. I mean, there are different agents out there, and everyone has different strategy, and there are markets for everyone.
Sure.
But this is how I believe my value is, to work with them from beginning and navigate them to find the right place for them, all the way until closing. So that's how I help my clients overall.
Yeah, that's great. I think having very few agents have a strategy for what happens after the deal closes. Everyone's pretty good when they have a deal happening. They know what to do. They follow the steps. They open the escrow. They, do the walkthrough. They do the agent visual, all that other good stuff. But very, very few agents have after we close, here's how I keep in contact with you and continue to add value and being your agent for this transaction and the next one and being referable and all those other things. So good for you for having strategy around that. Not everyone does that. It's shocking to me after doing this for as long as I have. It's like, how do you interact with your clients after you close? You're like, what do you mean? The deal's done. I'm like, okay, all right, got it. That probably comes from your background in, relationships, because
that's true.
You never know where the next deal's coming from.
Exactly. And some of the clients, people are curious. They want to know what is the value of their home, 6 months from now or whatever. So I do that. I work with them. And if there's anything needs, I support after that.
Very good. Well, thank you so much for being on the show. I really appreciate you making the drive up here, because I know that was a bit of a haul this morning. So thank you for being here, and we'll keep in touch, and wishing you lots of success and what comes for the next in the next year.
Thank you so much, Dan.
Thanks, Mahla.
Thanks for having me.
Appreciate you. Yeah.
Stay up to date with Bay Area real estate. Hit subscribe now if you haven't already. Did you enjoy this episode? We love